Hello friends, Mandar here. I am back with another video. Today we are going to talk about another topic, which is cryptocurrency. So I am making a series, what do you do after you get a green card? Because when you are in the process, you have nothing else to think about but just to track your progress in the priority dates and things like that. So I am making a series on a lot of other topics that you might be interested in, and this is one of them. I'll be talking about some of the fundamentals, how the cryptocurrency works, how is it different than the regular fiat currency, what is the process behind the transactions, validations, its security and things like that. I'll give you the basics, just enough for you to know what is cryptocurrency. And then I'll go into the topics such as whether you should invest, how much should you invest. So this topic is for anybody who is interested in knowing the fundamentals of cryptocurrency and the advantages and risks of owning one. So I would suggest watch this video until the end, and I hope you like this topic. Let's get started. So I don't need a disclaimer on this video because this is not related to immigration. So many of you must have come from the financial background, and many of you must have watched other cryptocurrency videos. There is a lot of information on the internet and some of the videos that take you into the depths of cryptocurrency. Our average Joe or you and I don't need to know that much about it. We just need to know enough about it just to know what it is based on, what are the risks, what are the securities that it guarantees, so that we can make an informed decision whether we should invest in cryptocurrencies or not. So you must have heard Bitcoin from a long back. Bitcoin started about 13 years back in 2007 or 8. There is an anonymous person, Satoshi Nakamoto, who actually wrote a paper on how this digital currency or cryptocurrency will work. What is the technology behind it and how it determines and validates the transactions. And then it gives you the rewards in the form of bitcoins. Now Bitcoin is one of the examples of cryptocurrency. There are a lot of altcoins such as Litecoins, Dogecoins and other coins that I will talk about later in this video that are also cryptocurrencies. But in this particular video, we are mainly going to focus on Bitcoin as an example. So let's get started. Okay, so now let's look at what is cryptocurrency. So I want to compare it with the fiat currency. Now when I say fiat currency, it is a normal currency that you and I know, which is something like a US dollar or a Canadian dollar or any other currency from any part of the world. So now this normal currency, which is also called fiat currency, it is based on some underlying premise. So basically it is backed by either the government or it is backed by some commodity or things like that. So it has a perceived value to it. So for example, a US dollar, it has a value and a trust built around the world. So when you have a dollar bill in your hand, it means that the US government guarantees that this is going to be a value of $1 note in your hand. That is the kind of backing that a Federal Reserve Bank has for you against that dollar bill. So when you have a dollar bill in hand, you actually have a value worth of $1. So that is true to a lot of other currencies in the world. So that is called fiat currencies. Now it has built trust around the world. So anybody who knows or anybody who owns a dollar knows that they have a value attached to it. So when you talk about the fiat currency such as US dollar, it is centrally controlled by the Federal Reserve Bank. So they decide how much money to print, how much is in the circulation, what is the value, what is the currency exchange rate. All is determined by a central agency or government. So you and I are very well aware of it. Now let's look at how it compares with cryptocurrency. Now in cryptocurrency, what we will do is we'll take example of Bitcoin. As a Bitcoin, if you know, there is no intrinsic value to it. So there is no backing of gold or silver or any commodity, or there is no backing by any particular government that will give you a guarantee that this Bitcoin has a certain value to it. So there is no intrinsic value to a Bitcoin or any other cryptocurrency. Now the other factor for this is it is not supported globally. So this is not something that is being accepted globally. Yes, we have some institutions and banks that are starting to invest in crypto portfolio, and there are some big companies also investing in cryptocurrencies in the sense that they are expanding their portfolio to have bitcoins within their portfolio. So that's the extent of it, but the cryptocurrency is not yet globally accepted. In fact, there are certain countries in the Southeast Asia that are against In fact, there are certain countries in the Southeast Asia that are against cryptocurrency, such as India and China. They have put a lot of restrictions in it. Although China has allowed a lot of Bitcoin mining, I'll come to what is Bitcoin mining in a bit, but there are certain regions in the world that are against cryptocurrency. And then, as I said, the acceptance of cryptocurrency is expanding year over year, but it is not global yet. So I talked about it has no intrinsic value yet. It is not backed by any central bank, not universally accepted, and it is not centrally controlled. Now I will get to the point of how it is not centrally controlled. So now let's look at some of the basics of cryptocurrency. So now again, the cryptocurrency is, the value is based on how much the buyer is willing to buy for it. It's in the eyes of the beholder. Basically, it is not set by one single agency. It is based on the transactions, how many people trust in buying it and for what value. That's all the value is based upon. Now this is a decentralized currency. What it means is no central agency will have any control on its price, and we'll get to it in a minute what it means. It is gaining more and more acceptance as we speak, and the transactions of the Bitcoin basically are supposed to be more secure than your fiat currency. Now fiat currency transactions, so if I transfer some funds to my friend's account, that is controlled by the bank. The bank knows exactly what it is, and they can validate that the money has been transferred from me to my friend. Whereas in case of cryptocurrencies, there is a lot of decentralized nodes that will do the validation of any transaction that happens in the cryptocurrency. Now these are the fundamentals of cryptocurrency. If somebody is talking to you about cryptocurrency, and if you know at least some of these words, you will know what they are talking about. Now when I say nodes are the decentralized entities that validate the transactions. That's where the ledger is built. Now what is a transaction? If I trade cryptos with somebody else, so if I give you a Bitcoin, that is a transaction. So I sell it and you buy it, that is a transaction. Now these transactions are saved in a ledger. Now these are electronic ledger. It's not a physical ledger, or it's not a database ledger. It is an electronic ledger, and it has a crypto signature on top of it. Now there is something called validation, and that is exactly what is meant by mining. So when you hear people mining Bitcoins, all they are doing is validating the transactions. Now what is the proof of work? Proof of work is that you have successfully validated a transaction. When you do that, that's when you get the proof of work. Now once you do the proof of work, once you have validated the successful transactions and you have a proof of work, that's where you get a reward as a Bitcoin or any other cryptocurrency for that matter. Now that is exactly how the miners earn Bitcoins, in terms of providing the validation to the secure transactions across the Bitcoin network. They do the validation with their enormous amount of processing power that they engage to validate these transactions, and then they get rewarded in terms of the coin. And then what is a wallet? Now when you and I do the transactions of cryptocurrency, we will have to use some kind of electronic wallet, and these are provided by some other companies such as Coinbase and things like that, and I'll come to that. So that is called a wallet. So you cannot physically hold a Bitcoin in your hand or drop it in your wallet or things like that. You have to hold it in your electronic wallet in any of these companies that allow you to do the transactions in cryptocurrency. Now let's look at what is a blockchain. Blockchain is the method by which the crypto transactions are ledgered, accounted and validated. So simple block consists of a block header. It has a previous hash value. So once I get to the blockchain, you will know what is the previous hash value. There is a timestamp of the transaction. So every time you make a buy or a sell, there is a transaction timestamp, and it is saved in a block. And in this particular block, there is a timestamp. Then there is a body of the transaction. The entire transaction is saved in something called Merkle tree hash, and that is the transaction info. So basically the transaction info is converted into a hash value, and that hash is unique to that transaction. And then there is nuance, that is a proof of work. So these transactions are validated by Bitcoin miners who are doing the validation. Once they complete the validation, they get the proof of work, and then at the bottom of the bit of a crypto block, it also saves a new hash for this entire block. So now once this block for a particular transaction is ready, and if it is validated, it is then entered into a blockchain. So as you can see, all these blocks are in series, one after the other. The information on the previous block is saved on the next block. So once this blockchain is created, this is replicated across all the nodes. So once you have a transaction, you create a block. That block saves all the transaction in the form of a hash. It also saves the value of the previous block. Now let's look at how the blockchain transaction works. Once a transaction occurs, what is a transaction? Either a buy or a sell. Once the transaction occurs, it creates a block that represents the transaction, just like what I showed in the previous slide. The block is broadcasted to every node on the network. Everywhere in the world where they do the crypto transaction, they have to have a node, and these transactions have to be broadcasted to every node on the network. Now each node also validates the transactions. That's where the Bitcoin mining takes place. Mining is nothing but the validation of that transaction. After the successful validation by the node, it receives a reward. So that's where the Bitcoin miners actually earn the Bitcoins once they do the validation of a transaction, and then the validated block is added to the existing blockchain. So that's how the blockchain is created. Now when they say the transactions are very secure, what they mean is these transactions cannot be replicated or tampered with, because as soon as you tamper this block, it no longer remains a valid block, because now the hash value has to change, and once the hash value changes, it no longer can be part of the blockchain, because the original block, that is accurate transaction and validated transaction, is replicated in all the nodes across the world. So if somebody tries to tamper with an existing validated block, then it does not exist in any other node, so it automatically is thrown out. It is out of transaction. So that's why it is extremely difficult to tamper with the crypto transactions. Now this is all the working behind the cryptocurrency, what is blockchain and all. Now the average consumer of cryptocurrency like you and me does not need to know this amount of details. If you know, that's well and good. Now, you can also go much deeper into the blockchain technology and learn how each and every coin is developed and how they work, but it is not necessary for you and I unless you want to become a Bitcoin miner. And what does Bitcoin miner need? They need enormous amount of processing power. So you and I don't have the machines at our homes to do this transaction validation with the amount of CPU capacity that our laptops or desktops have. It needs a huge processing power, and when it comes to processing power, it also draws a lot of electricity. So that's why this Bitcoin mining is really bad for the environment if it's drawing the electricity that is based on fossil fuel. Now the new trend has emerged where the Bitcoin mining is done on the electricity that is produced from renewables, but that has not happened yet, because very less percentage of the electricity produced in this world is based on the renewables. So until that time, these Bitcoin miners will have to spend a lot of money to validate a transaction, and once they validate a transaction, they get something called a reward in terms of a Bitcoin. Now these miners are going to do the mining for the foreseeable future, and it is said that there will only be 21 million Bitcoins ever produced through this mining activity. So there is a limit on this technology. It has a capacity. So this capacity will probably reach somewhere in 2140 or something like that. So once that capacity is reached, there is not going to be any more Bitcoins produced. So the highest number of Bitcoins is 21 million. In that particular sense, the Bitcoin value might increase a lot. Now let's look at what it means for you and me. Can you mine? I just talked about you can create a node you can't create a node unless you are a millionaire. The reason I say it is because it requires tremendous processing power, CPU power, to run these validations of transactions, and that also consumes a lot of electricity. So you got to be a millionaire to actually create a node. It needs incredible power, processing power and electricity. So unless you have that capability, all you can do is buy and sell Bitcoins. You can save, buy and save bitcoins in your wallet, electronic wallet, and you can gain appreciation on it. Now let's elaborate on crypto investment. This is still not acceptable worldwide. As I said before, some governments are actually banning cryptocurrency, extremely volatile. This has started back in 2008, and then the price of the Bitcoin, for example, has skyrocketed in some instances and dropped like a rock in other instances. So back in 2017 or 18, the value of the Bitcoin was around $5,000 to $6,000. It reached to $20,000 in early 2019, and then it again dropped to almost $6,000 to $7,000 per Bitcoin. Later in 2020, it skyrocketed to almost 40,000. Then it dropped again, and then it increased to 66,000 earlier this year. Now it's hovering around 43,000 per Bitcoin. So you can see how much volatility is there in Bitcoin. Now this is an opportunity for some because they can buy low and sell high. If you can time the market, if you are good at it, then you can actually make money on Bitcoin. But for average individuals like you and me, this is a tremendous risk. There is too much speculation around this topic because there are some people who like Elon Musk, they tweet about Bitcoin and it skyrockets. If you have heard about Dogecoin, you will know what I'm talking about. Elon Musk a few days back made some tweets, and that had a big impact on the price of the Dogecoin. So be careful. This cannot be an investment. This can be your a small portfolio in your wallet, but this cannot be an investment as of now, at least as per my knowledge. Now now what are the coins to buy? Now I'll just give you some examples, and these are the coins. Actually, if you are new to cryptocurrency, you might go into Bitcoin because that is the biggest coin cryptocurrency. Then there is Ethereum, that is the second largest. Then there is Litecoin, Stellar Lumen, Celo, Compound, and there are almost hundreds of coins out there. Which one to buy or which one not to buy really depends on your research. It has a technology behind it, how to validate the transactions, how to transfer money, how to create faster transactions versus slower. So each coin has a unique feature in terms of technology behind it. So you got to read about it before you make a dive into it. If you are new like me, I would just stick to the top 3: Bitcoin, Ethereum and Litecoin, and be done with it, because that's the extent of the knowledge that you will have about these coins. Now, where to buy and trade? You cannot buy them in the bank or you cannot buy them in the market. You have to buy it in a particular a company that allows you to store bitcoins in a wallet. So Coinbase is one of the biggest ones. Coinbase Pro is one of their other versions that gives you coin transactions for lesser commission. And then there is Robinhood, and there are many such platforms that allow you to buy and sell cryptocurrency. Now, how much should you buy? So don't buy. Now here are some fundamentals that I would like you to be careful with. Don't buy with a loan. If you don't have the money, don't buy it, period. Don't buy on borrowed money. So never buy cryptocurrency on borrowed money. Start with a very nominal amount if you are new. I will not put thousands and thousands of dollars if you don't understand how this works. For beginners, don't go above 1% of your total savings. That is the kind of rule that I go by. If you are a beginner, don't go above 1% of your total savings. If you are a pro, if you have been playing with bitcoins and trading bitcoins for certain duration, you still don't go over 5% of your entire portfolio or savings. That is just for now, because there is this cryptocurrency is still speculative. It is still in early phases of its lifetime. So even if you are pro, I wouldn't put anything beyond 5% of your total net worth. And now last thing is cautions. Here is the most important part. Just because you hear a lot of people talking about bitcoins and currency and how you can become millionaire by buying some now and then leaving it in your account, just be cautious. And these are some tips that I would like to give you. Crypto gains is taxable income. So even if you earn some money out of the cryptocurrency transactions, that is a taxable income. You can sell cryptos to US dollars. So basically, if you have cryptos, you can turn it into dollars and back and forth. Extremely volatile, and I talked about it. Because it is based on speculation, right now it is extremely volatile. This is not considered to be an investment as of now. It is pure gamble unless you understand and follow and actively participate in the trading. So make sure that you understand the cryptocurrency before you enter into it. And nobody knows what the future holds. If somebody is telling you that they are damn sure that the value of a Bitcoin is going to go to 100,000 or 500,000 or a million, they are fooling themselves and you. Don't trust anybody. Do the research, do the fact finding, have your risk margin, play responsibly, and then there is a chance that this might go very high and you might earn some money at the end of the day. So I hope you got some fundamentals of cryptocurrency in this video, and I'll continue to make such videos in future as well. So if you haven't already subscribed to my channel, please do subscribe so that you get the notification. And if you like the content of this video, please hit the like button, and I will see you in the next one.